Hello Doge family, how are you today? Doge lovers, don't forget to like the video, subscribe to my channel and turn on the notification bell before going into the details. I work hard for the Doge family. I'm glad. We will grow Dogecoin together. What I say in my graphic predictions are always correct, friends. I hope it will be useful for you. I will determine the trading points for those who want to trade short. And today I will tell you the important developments. Dogecoin slipped by 0.05% on Wednesday. Following a 1.08% gain on Tuesday, Dogecoin ended the day at $0.2058. After a mixed start to the day, Dogecoin rose to a late morning intraday high $0.2138 before hitting reverse. Dogecoin broke through the first major resistance level at $0.2119 before falling to a late afternoon intraday low $0.2117. Steering clear of the first major support level at $0.1975, Dogecoin returned $0.2050 levels to limit the downside. Dogecoin was down by 0.49% to $0.2148. A mixed start to the day saw Dogecoin rise to an early morning high $0.2063 before falling to a low $0.2044. Dogecoin left the major support and resistance levels untested early on. Dogecoin would need to move through the $0.2071 pivot to bring the first major resistance level at $0.2125 into play. Support from the broader market would be needed, however, for Dogecoin to break back through to 21 cents levels. Barring an extended crypto rally, the first major resistance level and Wednesday's high $0.2238 would likely cap any upside. In the event of another breakout, Dogecoin could test resistance at 22 cents levels before any pullback. The second major resistance level sits at $0.2192. Failure to move through the $0.2071 pivot would bring the first major support level at $0.2104 into play. Barring an extended sell-off, however, Dogecoin should steer clear of sub-19 cents levels. The second major support level at $0.1950 should limit the downside. Looking at the technical indicators, first major support level, $0.2004 pivot level, $0.2071 first major resistance level, $0.2125 23.6% fib retracement level, $0.3016 Dogecoin price action raises more questions than answers, while Doge threatens a decline. Dogecoin price responds to the oversold market with indecision and uncertainty, not characteristics of a significant low. Doge fails at the 50-day simple moving average, SMA, with a sizable reversal but confirms the double bottom. The 200-day SMA is the new line of defense as the digital token moves in an ascending parallel channel. Dogecoin price rebound remains unvalidated as the cryptocurrency fails to register one close above the midline of an ascending parallel channel since the July 21 breakout. Without greater conviction, Doge is not positioned for notably higher prices, and maybe the 8-day rebound is just a resting place before the correction resumes. Dogecoin price behaves like a meme coin, not money. Over the last 7 trading days, Dogecoin price has closed with 4 doji candlesticks, including today's candlestick. The other 3 came very close. The lack of price traction embodied by the doji candlesticks is a clear reflection of indecision and uncertainty among the Doge investor ranks. It may suggest the last 8 days are simply a pause in the larger correction beginning in May. A second concerning development is the inability of Dogecoin price to manufacture one daily close above the midline of the new ascending parallel channel. Once again, emphasizing the underlying reluctance that is accompanying any intraday strength for Doge. If investors did not target the breakout on July 21 as an entry price, it is challenging now to isolate a timely entry price as the rapidly descending 50-day SMA at $0.238 presses down on price. To adjust for the lack of conviction, Doge investors should wait for a daily Dogecoin price close above the 50-day SMA before allocating capital. Interestingly, Dogecoin price is granted 3 support levels that could contain weakness moving forward, and they closely align. The May 19th low of $0.195 has been instructive for Doge recently, on the up and downside. A second layer of support is the lower line of the ascending parallel channel at $0.193. The final level is the strategically important 200-day SMA at $0.189. A failure to hold the 200-day SMA on a daily closing basis introduces the potential to break below the July 20th low of $0.159 and the June 22nd low of $0.152. The presence of numerous Doge candlestick patterns on the daily chart is not impressive, but it does not guarantee that the digital asset will flip to the downside. Nevertheless, it confirms a balance between supply and demand that is consistent with indecision and uncertainty. In general, an uncertain investor base tends to rush for the exits at any sign of trouble. As a result, a Dogecoin price close below the 200-day SMA will invite a new wave of selling pressure, not the kind that is characteristic of real money. Now what now? At the same time as this good news is coming out, there's also more, potential, bad news from Washington. In a letter to U.S. Treasury Secretary Janet Yellen dated Monday, Senator Elizabeth Warren inveighed against the growing risks that cryptocurrencies pose to the financial system, and said she's increasingly concerned about the lack of sufficient regulation of the crypto market. Calling the $2 trillion cryptocurrency market a systemic risk to the U.S. economy, Warren warned that volatile crypto prices pose unique threats to the economy, and that material distress in the cryptocurrency market could spread throughout the financial sector. So far today, buyers of Bitcoin, Ethereum, and Dogecoin don't seem to share the senator's concerns. But if a government clampdown on crypto trading is coming, so what good news first? Bloomberg reported yesterday that soon-to-be IPO Robinhood is developing a new feature that promises to better protect its users against volatility in cryptocurrency trading. Dubbed price volatility protection, this feature promises to skip recurring orders or buy less than your chosen amount in the event of dramatic price fluctuations. Although details are scarce at this point, the idea behind the feature appears to be that a customer might elect, when Bitcoin or other cryptocurrency prices are falling dramatically, to skip purchases and so avoid trying to grab a falling knife. Conversely, when prices are surging, the feature might protect a customer from buying more than they intended to. Utilizing such a feature might cause a Robinhood customer to forego cheap prices in the event of a sell-off, or miss out on a rally when prices are surging. Still, it's possible that the peace of mind of knowing one won't accidentally put too much money at risk either way will prove attractive, and remove an obstacle to investors. I will keep you informed of developments as soon as possible. We've come to the end of the video, guys. I hope you understand what I want to say. Express your thoughts by commenting. Don't forget to like the video and subscribe to my channel. See you in the next video.